This is Mo from MRight Trading. The date is Thursday, June 26th, 2025. And although I'm still trying to find a reliable day trading strategy, my swing trading strategy has been actually pretty good. On May 22nd, I entered 12 positions and they are up 24.4%. SPY is up 3.89% in that same time frame. May 27th, I entered 14 positions. Two stopped out within the first 2 days, but the others are up 8.75% and SPY is up 4.31%. On June 18th, I entered 9 positions. They are up 7.35% and SPY is up 1.85%. All that is to say is that my picks are generally beating the S&P 500. I told a friend about it, and he said I should do a video on how I pick the stocks. So here we go. It all starts with TradingView's Screener, and they have a separate page that you can go to, but they also have this little icon here that lets you open up the screener while you're still on your chart. So let's see. What right now, I have a screen that I set up a while ago, but what I'm looking for in the screener that I want to build, or that you should want to build, is something that has a smooth and consistent long, mid, and short-term performance chart. And for that, we need liquidity. That means money. We mean we need trading volume. We need room to move, so there's no overhead resistance. And we have a stock that has the capacity to move a lot. We need favorable trends, which means stable moving averages, and we need good short-term signals, which means a good intraday chart. So let's go about building a screener. So let's start from scratch. Let's create a new screen, and we'll call this high performers, or let's call it top performers. There we go. Create that. Bam, 13,000 symbols. So let's start weeding those. Let's see. First thing we want is a market cap, and that's already in here. So with the TradingView Screener, you have all these defaults that are up here. For the most part, I don't use most of them. And the thing is that if you want to use one of them twice, you can't. So you have to use this plus button. But right now, let's go for market cap. And I'm going to go for small caps because you're not going to get a 10,000% move on an NVIDIA or a Microsoft or a Facebook, but you can get it on a small cap. So let's pick that. Second, we want the performance over 10 years to be better than the performance over 5 years. And there is nothing in here that shows you how to do that when I click performance. And so we have to go to a manual setup. And so we want the performance for 10 years to be above the performance for 5 years. Because we don't want the performance to decline from 10 to 5 years. And then we want the performance for 5 years to be greater than the performance for 1 year. And as you can see, we've already used that performance default, so we have to use this plus button to get this next one. So I want to look for performance for 5 years, and we'll add a manual setup so that 5 years is above the performance for 1 year. Apply. Good. All right, we got the first 3 out of the way. So now we want the simple moving averages, which again does not exist here. So we'll have to use this plus button. Simple moving average. And we want the 300-day. Add filter. And we want that to be below the current price. We want the price to be above the 300-day simple moving average. So now we want the same thing for the 200-day moving average. So we'll have to type in simple moving average. 200-day add, and we want the price, we want the 200-day to be below price as well. So now we're down to 109 symbols. So that's looking much better. Now we want liquidity, like I mentioned before. So that means we want the average volume to have at least some basic, some threshold. So we'll use the default, which is 10 days. And then we'll say we want the 10-day average volume to be above 100,000 shares. So 100,000 shares traded daily. All right, and that gets us down to 49. Now, this is a list that I would use to post on my social media feeds because it has some pretty good stocks in here, and you can actually look at it not just in the list view, but in the chart view, and you can see what the charts look like. So some of them are pretty steady. Actually, this is 5-day. What I want to look at is 1 year. Here we go. So this one's a little sideways over 1 year. It's good for 5-day, but for 1 year. Here, this one's just coming over, but it's a mining company. Mining companies are cyclical, so I'm not going to deal with that one. Sprot's taken off. It was consolidating for a long time, then took off. So we have some good charts in here. DCO's blasting off. Wilden. And then we have some that are just pretty consistent, like Seneca Foods. Another one taking off, TSSI. So we can take a look at those charts, but we can also take a look at the direct chart just by clicking these links. But before we do that, these, like I said, are what I would share in social media, but what I would actually buy and show in my mailing list, for that, we have to add a couple more or a few more filters. So the first one we want to also add, it's kind of tricky, but we want the 200-day simple moving average to be above the 300-day. So let's go back to simple moving average. And we want the 200, add filter. And then there's nothing that says 200 above the 300, so we have to do this manually. So 200-day above or equal to the simple moving average for the 300-day. Apply. And then the same thing, we want the 200 or the 50-day simple moving average to be above the 200. So we want to manually set that up. 50-day above or equal to the simple moving average for the 200-day. Apply. Great, that takes us down to 24. Now the last thing is ROE, return on equity. Return on equity, trailing 12 months. And we want that to just be 0% and above. We just want it to have gone up. That's it. And in his book, 100 Baggers, Christopher Mayer talks about why that's important. Return on equity is really defined by how much the company is making versus how much investment was made in the company. And if they're making more than what was invested, and that number keeps increasing, then that's a good sign. It means that they are, and it could mean that they're just making better products and having a high profit, or it could just mean that their capital allocation is better. Either way, the stock goes up. Better if they're doing all those things. So in any case, the ROE helps that out, and we want the ROE to be 0% and above. Bam, and that leaves us with 19 symbols. Now these are the ones I'm actually starting to think about buying myself. And so from here, we have to go into the actual charts. So here we see DGII is one of them. Actually, I have that chart up. But before we do that, let's save this. Or even better, let's get rid of some of this other stuff that we don't need. So we didn't use any of this stuff. We just used the plus button. So we can take all these things out. If we want them back, we just type in the name that we want, PE ratio, EPS, earnings per share. So all these things we can just take out, and it really just cleans up the interface more than anything else. If you want to leave them in, that's perfectly okay, but it's just less confusing. And get the last one. Now let's save. Bam. Good. That's saved. That's top performers. Let's close that. And let's take a look at DGII. Now, so when I get down to the point where I want to start finding out if it's a good time to enter, I have to go to the chart. So I have a set of indicators that I use to do that. For now, we don't need this. So let's type in, I just hit the slash key, and that'll pop up this prompt. And I'm going to look for, multi VWAP, MW, bam. That's a free indicator on TradingView. And what it does is it shows the volume weighted average price, or the anchored volume weighted average price, from various days and time periods. And I look at that on the 1 hour chart. That's the one that comes out that comes out the best for me. So from here, once that gets loaded, we can see that we have the 5-day moving average, 5-day volume weighted average price curling up. So it's increasing, and the price is above it. And what the anchored volume weighted average price actually represents is what people have actually paid for this stock over this period of time, and the average person, or what the average person has paid. And so this means that everybody is making money, because if this is the average price and the price is up here, then most people are in the money on average. That's a good sign, especially over 5 days. So that's my first filter. And most of the stocks are like that, but some of them don't. Some of them are curling down. So I wait until they get back above here. And if they can't get back above there, it means I should have left it alone. So that's the first one. And then the second is magic order blocks. So I'll hit the slash key, magic order blocks, MW. Pop, let's add that in there. And for DGI, we see we do have some overhead resistance coming up at $35. So that's something to look out for. We'd at least have room to go from 34.71 to up there, but I'd have to see some evidence for why this could break through. And for this particular stock, there will be some. So let's see. Let's add for longer, for a longer period. We're going to turn these off. Bop, simplify that. And then let's add the multi VWAP from gaps. Bam. And then from a longer perspective, what this actually represents is the anchored volume weighted average price for the biggest gaps. So here, the biggest gap of the month was on June 25th. Biggest gap of the month here, biggest gap of the quarter, biggest gap of the month. And so what this says is that from these key points, and it could have been because of an earnings report or something else, or some news event. Here, this earnings report led to a huge gap up, or a huge jump. And at those points, if we have price staying above, it's a good sign. Also, you can see that these are starting to line up where the anchored VWAP from gaps are becoming stacked. So that's another good sign. So let's add something else I use, which is the ROE. So before, with the screener, we could only look at it. Let's go to a 1-day time frame. We could only look at it from the ROE for if the last ROE numbers were better than the previous one. Here we can look at a whole chart, and we can see with DGII, ROE has been increasing very, very consistently, which is an amazing sign. And so with all the other stuff that's happening great for DGII, this would be an indicator that maybe that overhead resistance isn't so important, because if it's been doing this, and this is much harder to do than to get this price up, and the price will tend to follow this increase in ROE. So that makes this a good stock. So this is one I got into recently. Let's take a look at another one from the list. Or actually, let's add one more indicator. And this is a float shares outstanding. Now, what this represents is the amount of shares of a stock that are outstanding. When this number goes down, that means the supply of shares to buy is going down. And if the demand goes up, that means the price goes up. So with DGII, the number of shares is going up. So it doesn't really mean anything significantly or significant. If it were going down, it might mean something. And for that, we can look at, actually, there's one, one other thing, and that is, let's see, /3 SMA. There. Okay, let's turn off the gaps. And these are the SMAs. So these are the ones that we looked at, I think. Nope. So let's switch this to 50, 200, and 300. Bam. So this is what we used in our filter, and we can see they're stacked like we requested. So this just happened, which is, again, a good sign. We have, for GDII, we have the ROE increasing. We have these things stacked. We looked at the short term. Now we've looked at the long term. So this is like I said, this is something I got into recently. So hopefully that'll turn out okay. There's another one I wanted to look at. Let's go back to the screener. Let's go to SENEA, Seneca Foods. Don't need this anymore. And here you see the ROE is decreasing. So that's a sign that maybe it's not something to get interested in. But on the flip side, check out the total float. The total float is dropping. That means that the company's either buying back there are fewer shares available, which likely means the company's been buying them back a lot. And so they have more, if they have more demand with the fewer shares, then that will bring the price up, which is exactly what we're seeing here. So this might be something good to get in, and I might jump into this one. And as you can see, it just had a nice big move today. Let's see. And then with SENEA, if we look at some of the shorter term signals, so let's go back to 1 hour, and let's turn off the SMA ladies, which just turned positive. Look at VWAP from gaps. That looks good because they're all stacked. Magic order blocks. Let's go to the 9-minute. There's nothing overhead. 15-minute, nothing overhead. 1 hour, nothing overhead. So we're at all-time highs, or I think that's probably what's going on. And there's just nothing overhead. Overhead is just green sky with fewer stocks or fewer shares available. And multi VWAP on the 9 minute probably looks, or on the 1 hour time frame probably looks good too. Yep, rising 5-day anchored VWAP. That's what we're looking for. So this is actually a good stock to look for. And if you want to see the stocks I actually picked, go to my TradingView profile page and click the link to my website, and you'll be able to join my newsletter. And that there, I talk about a lot of the stocks that I've picked and sorted out. You could probably do it on your own now because you know how to go in and create your screener and pick your own stocks. But if you want to see what I'm doing, that's the way to do it. And if you're watching this video on TradingView, make sure to give my indicators a boost, or send me a DM. Let me know if you like if you like the topic, or if there's anything interesting or not interesting. And if you're watching this on YouTube, feel free to comment. Make sure you like and subscribe. And I appreciate you getting all the way to the end. I know this was long, but I'm hoping that you've got some useful information out of it. All right. This is Mo signing out. Thanks again for watching. Goodbye.